Well, the bottom line with Russia is they are cutting deals all over the world for oil, for gas, for natural resources, and they are demanding payment in either rubles or gold. Matter of fact, today it just came out that there was a statement from Putin and the Saudi prince that they are going to continue the OPEC plus. We know that Russia and China are trading directly in rubles and yuan. We also know that India has gone along with it, and they're actually getting oil and gas paying in either rupees or rubles. That is on a discounted basis, but the bottom line is Russia is, if you want to call it fracturing the dollar, that's what they're doing, because they're setting up a second monetary system.
Well, it does seem to be what is playing out. Interesting that you said fracturing the dollar. I guess that's what many of us have expected for a long time. And I guess we've seen so far the price of gold, let's say, has firmed, yet still right underneath $2,000. What stage do you think that's in? I mean, when, for the people who are wondering, when do we see $2,500 gold or $3,000 gold or a next move? How do you think that all plays out?
Well, I think when you see $2,100 gold, and when you see, I don't even think it'll take $30 on silver. I think under that, maybe $27, $28, something like that. Then you'll see the paper control completely lost. And they are losing control now. I mean, look at the premiums. Look at the premiums on silver. It's almost, you can't find silver, real silver in your hand for under $30. And I mean, that includes, bars, kilos, what have you.
Well, it's certainly actually interesting you mentioned that, because we talked with Andy Schechtman the other day about really that boundary between retail silver and institutional investment grade form silver. And perhaps any comment on that, because I know we see the divergence in those two markets, and while Andy commented on it, I think folks would be interested to hear your opinion of that, where they're going out, they're seeing the high premiums on retail, yet see the COMEX just seem completely divorced from that. And anything you could add on that?
Well, COMEX is divorced from it. I mean, you're like I said, you're seeing retail silver over $30, and we know both gold and silver in truly institutional amounts. When I'm talking institutional, I'm talking about a $25 or $50 million trade. It's difficult to source.
Yeah, and along those lines, Bill, you and I have talked about this offline. It's something I've been doing, when I'm not doing the show, is figuring out ways, all right, well, if there's this growing spread, and if the COMEX actually has any physical delivery mechanism, I mean, I've been looking into ways between me and the people I know taking bars and, assembling our own chain, whether, outsourcing parts, but getting physical products at lower premiums that people can buy. But I wonder, all right, it's one thing that I'm thinking about, and, maybe a year from now we have that all in place, hopefully sooner, but are there other larger groups that are already existing in that chain doing that? Because, again, it seems like there's that arb on the board right now that as the spread grows wider, and at least from my financial background, if you were saying what would be an indication of stress in the silver market, I would think seeing a blowing out of the physical to paper spread, which maybe we haven't seen it officially blow out yet, but certainly is wide, Do you think that's something that's happening on a bigger level where people are starting to arb that yet, or what's going on behind the scenes there?
Yeah, I do think that the process has started where people are trying to arb it, but you have to understand that the demand is so great. I mean, you could create 250,000 ounces, fabricate that into, whatever round or what have you, and it'll get chewed up right away. I mean, the flow is just unbelievable. The volume is unbelievable.
Yeah, and I know you do brokerage for Miles Franklin as well. What are people saying when they call? Are they asking what you think, or is it just, hey, I want silver?
No.
What are the people actually saying when they're placing orders or they're talking about that?
I'm talking to people on a daily basis now, new people. They contact me. They tell me, I want gold, I want silver, and I want to pay today. And the motivation is they want their money out of a bank account. They want to get out of the system. They want it in their hand. So there's a definite, and this is a change from, say, 6 or 8 months ago. There is a definite urgency for people to exit the financial system, whether it be monies with a bank or a broker or an insurance company. It doesn't matter. I've seen all of it. And I mean, it's the number one, as far as I can see personally, it's the number one trend where people are that have never bought gold, never bought silver before. They don't, and obviously I've got to explain to them the different products, but that's not foremost in their mind. What's foremost in their mind is getting out.
I think that's quite well said, Bill. Especially for me, I was learning about gold and silver while I was trading options, 13 years ago. And when I looked at the map and the approach I was coming from, certainly in seeing, wait a second, with what's going on with the money printing and what will have to go on going forward, all right, the price of silver is going to go up. And, I guess so far, well, I guess it depends when you measure from, whether it has gone up or not. But that was what led me into it, whereas, fast forward 13 years later back to now, I find out, okay, there is actually the government's price fixing it. And I don't know how long that goes on for, but after seeing what we saw in Canada earlier this year, what we're seeing with the Biden administration sanctioning anyone who says anything basically at this point. And it's really been thinking about that a lot lately where, okay, maybe the price cap goes on for a while, but now that other benefit of there's a degree to which it's like I'm concerned about it. Well, if you put money in a brokerage account and, there's a trucker strike here, and now all of a sudden that component of, wow, I have something that I can take out of this system that cannot arbitrarily be blocked, in my mind, has taken a bigger focus lately. And again, you just commented on that, but anything else that you would add there, or anything that feels worthwhile based on what you're hearing from people?
Well, that's a part of what's lit the fire under people. They see, they saw what happened in Canada, and they're hearing about central bank digital currencies coming. And if you think that with a central bank digital currency, you can't be shut off and basically completely shut down and become without capital, that's a big mistake to think that that's not going to happen, because that's what the central bank digital currency is all about. They're talking about ease of use, and we can track, we can track for tax purposes, blah, blah, blah. It's about control. And I think the average person understands. If they have gold or they have silver in hand, nobody controls that other than you. And that's, that is certainly one of the pieces to this exodus or mass movement, whatever you want to call it, out of the system. And Chris, I've got people, I asked, do you want to mail a check or do you want a wire? And the more savvy people say, no, I don't want to send a check. That'll take 7 days or 10 days to clear. I want it out, and I want it out now.
And understandably so, because it's interesting where, especially if you do have physical as opposed to SLV or some JP Morgan product, another way of looking at it is that if you have your silver out of the system, you're not as really perhaps as much tied to that COMEX price, because right now, if you bought Silver Eagles for $25 a year or two ago, they're, close to around $40. And I know some people get frustrated because when they try and sell things back, it's harder to get a bid. Now, that's another one of the projects that I'm working on, although when I talked with Andy the other day, I think they were paying $9 over spot for Eagles. And
yes. Yep.
So, if you're actually trading physical silver, the price has risen. But physical silver on a retail level is above $30, and I get it, and certainly I'm a part of it. Everyone's looking at the COMEX price, and we get frustrated. Yet it's interesting when you think about it. If you do have your physical, and Bill, I'm assuming, if people really have physical and they really want to sell it, if they contacted you, you would probably be able to help them find a bid. Is that correct?
Oh, yeah, absolutely. And also understand, if you got SLV or what have you, it's a piece of paper in an account. And even assuming that the system stayed up, you can't actually use it. Whereas real silver, you can use. And especially in a system down scenario, and you're talking to a farmer or just somebody who can fix your air conditioner or fix your heater or fix your car, you can give them physical silver. But in a system down scenario, what are you going to do? Promise them X amount of shares of SLV?
You don't get the wife SLV shares for Christmas, as the old saying goes.
Exactly.
It's interesting though, because I've been thinking lately how, it's been, over 10 years that I've been in silver, and I was actually looking at some of the multiples since 2008, 2009 on the stock market, and certainly anyone who's been in stocks as opposed to silver over the past decade, it's gone a lot better. Easy to say in hindsight, although what stood out to me when I was first getting into silver, which was what led me to find that, was I just watched the housing bubble collapse, which seemingly everybody, except for a few people like you and Peter Schiff and the others who were talking about gold and silver, were blindsided by. So, sure, I get it. On one hand, they've been right over the past 10 years, but I think we've seen now that in the stock market, we're left in an environment where any time the central bank or Ross and his buddies want to pull out the rug from underneath that, and they don't tell people when that's going to happen. So it's almost felt to me like, again, once the Fed starts the printing presses again, I assume stocks will go up a lot, but it's like it kind of requires you being invested in a Bernie Madoff type scheme to some degree. And I know that's an overgeneralization, but again, and not to say somebody should go overboard in silver, perhaps like I've done to a too extreme degree at times, yet, especially now where we see governments running out of money, increasingly aggressive. And again, that's a factor that everyone really needs to balance for themselves. And I wish I could give a more specific answer, but I think you get what I'm saying, where at least these are good questions to be asking before anyone is making a decision for whatever is right for them. And does that make sense? And any thoughts on that?
Well, it's a different world now, Chris. When I say different world, since 2008, the world has been on financial life support from the central banks. And where the central banks, where they are now compared to 2008, they're basically insolvent now. I mean, if you look at this rate rise, that has turned the European Central Bank, the Bank of Japan, and the Fed, basically it's turned them into insolvents. They're upside down. They have negative equity. And all you have to do is just start looking at what their holdings are and put the current interest rates against them versus where they bought them. I mean, you've got a 10-year treasury now sniffing at 10%. I'm sorry, at 3%. You get interest rates, even if they don't go much higher from here, this bubble is about ready to pop. And if you look at, mortgage rates have gone from what, 2 3/4, and now they're 5 1/4. Now, there's not a stock ticker that tells you what houses are worth, but all you got to do is take a $500,000 loan that 6 months ago or a year ago would have cost, you put 20% down and your payment would have been about $2,000. Now your payment's over $3,000. So what that's done is it's taken the demand and it's lessened the demand because fewer and fewer qualify to buy that same $500,000 house or $1 million house. So even though you don't see it, you're just starting to see the signs now with the volumes in the real estate market dropping. But price always follows volume. We've seen this in the past. And this goes back to every time the Fed has tried to raise rates in the past, they've broken something. Something always breaks. And this time, will it be the real estate market? Will it be the stock market? It'll probably be all markets altogether.
All righty. Well, I got a follow-up question or two on that because we're recording here on the afternoon of Tuesday, April 19th. I just flip over to CNBC. And interesting combo headlines here. Dow gains 400 points. NASDAQ jumps nearly 2%. Meanwhile, bond market, U.S. 10-year up another 5 basis points to 2.91%. Now, at least what I learned at Wharton, if interest rates go up, financial
assets go down
for the customers, higher borrowing costs for the companies. Yet so far, we're seeing a spike in interest rates. Yet the stock market seems impervious to that. Any thoughts on that one?
It's impervious until it's not. And when it's not, you'll see a panic. I think at this point, it's pretty much carved in stone that the markets will panic. Markets will panic because interest rates are going up. Markets will panic because earnings are going to collapse. And just look at the real economy. I went out to just an example. I went out to get an electric Polaris today for my ranch, and I wanted electric because I've got solar. And if you can't get gas, obviously I still have some power. It'll be 2 to 3 months before I get this thing. And a year ago or 2 years ago or 5 years ago, you could just go anywhere to buy anything and it was, you go home with it the same day. So these supply chain issues are also a big problem. And Chris, I want to mention to you from a timeliness basis, I sent you 3 charts on silver. And if you look at the 3 of them, you could post those if you want. You could do them as a direct link from JS Mindset. Even with today's manipulated pullback, short term, the silver market has, the MACDs have crossed over to the upside, giving you a short term buy signal, and we were already on a longer term, a weekly and monthly buy signal. So,
and Bill,
if you could post those.
I will post those, just if you can define MACD for someone who may not be familiar with that term.
Oh, that's the two lines at the bottom of the chart. That's moving average, convergence, divergence.
Right.
And that's more sensitive than like the 50-day and 200-day. But matter of fact, just a couple weeks back, the 50-day moving average crossed over to the upside of the 200-day moving average, and that's known as the golden cross. If it was the other way around, it's known as the death cross.
Right. And is it correct that generally a lot of the folks that are trading the futures contract in silver, once silver goes above those levels, is giving them a buy signal? Is that
right?
Generally your understanding?
It attracts buying. And also understand that those who are manipulating the markets, they see that also. So today's, 50-cent drop or whatever, we just crossed over 3 days ago, and my guess is this is an effort to try to negate that. But I think you'd have to get $1 or $2 more to the downside in order to prevent that cross, and I don't see that happening.
Well, although for what it's worth, on Tuesday they got a little chunk of that down lower, and we'll see how that plays out. Although, Bill, one other thing, back to what you were saying about mortgages and the stock market, as we learned in 2008 during the housing bubble crash, that mortgage and housing, that's a pretty big chunk of what we know as the U.S. economy, and the most dangerous thing to the housing market is higher interest rates. So seems like a big shoe to drop there that at some point they're going to have to reverse course and print money too. But what do you see happening in the housing market?
Actually, that's one of my forecasts for this year, that before the year's out, the Fed will be in easing mode again. I mean, QE to infinity means infinity. They're going to have to quantitative ease, in other words, provide the money, the capital, whatever, to expand money supply and expand debt. You cannot shut any Ponzi scheme off to new money. And that's what QT or tightening is. It would be shutting or slowing new money coming in. And they cannot allow that because you're looking at a bloated debt monster that requires new cash, new debt, day after day after day. And like I said, the Fed, history shows the Fed, since 1982, every time they've tightened, they've broken something.
Well, that is the pattern. And again, I would point out.
Chris,
yep.
This time I think what they're going to break is the entire system. 1987, it was stocks. Then 90, 91, 92, it was real estate. Then 98, you had emerging market debt. Then 2000 was the dot-com bubble. And obviously 2007, 2008, it blew up stocks, it blew up real estate. But understand that the debt levels all along were far lower than they are now. This is the most leveraged the system has ever been in throughout all of history. And higher rates is going to blow the debt bubble to pieces.
Yeah, you would think so. And even despite the Fed's talk about tightening and higher interest rates, I'm looking at the balance sheet here. No reduction
Still going up
so far. It was at, 900 billion pre-Lehman in 2008. It's over 9 trillion now, so a 10-bagger there. I guess we will see how that one plays out. Although
but they didn't get the bang for their buck. They didn't get their bang for the buck because if you look where the Dow and S&P and everything was in 2007, 2008, when the Fed had a $900 billion balance sheet, now it's 9 trillion. So it's a 10-bagger in Fed balance sheet, but it's not a 10-bagger in any asset. In other words, adding more debt, they're not getting dollar for dollar in asset valuation increase.
Yeah, it doesn't seem like it, and I've been wondering if we're going to see if they're really going to hike rates. It seems like maybe they'll hike. I mean, if they're really going to do 200 basis points over the next 6 Fed meetings, as Wall Street is saying is what's currently priced in.
Not possible.
Although,
it's not
Bill,
possible.
Well, here's a quick follow-on question there. I'm wondering right now the 10-year rate in the market has already gone up, and the stocks are still rallying, it feels like almost every day. Is that the exchange stabilization fund pumping in cash there, or it seems like there's some source of money coming in that would be contrary to actual investor supply and demand? It feels like something doesn't add up to me. What do you think?
Well, just look at the flows. Look at the flows. There's been more flows from hedge funds. There's been more, even retail flows are turning now. So to answer your question, yeah, it without a doubt, it has to be the Exchange Stabilization Fund / Plunge Protection Team, whatever you want to call it, working group, or President's working group on financial markets.
Well, that was my guess too. And Bill, before we wrap up, am I correct that Ross the Boss Benham of the CFTC, he has not called you yet to unveil his plans of what they are planning next, or when that money is going to come in and go out? And so far is just the banks and not any of us silver bugs. Is that right?
No, he doesn't include me in yet.
Well, that does seem to be the way it goes, but who knows? Maybe he'll show up at Silverfest 3. And Bill, in all fairness, if anyone could give you a run for your money on that Ben Bernanke costume, Ross has the haircut too. So I guess a lot to think about as we wait for the Halloween season. Certainly a lot to think about in the markets, and we'll wrap up for today. But Bill, could you let folks know if they have any questions? What is a good way to reach you, or where do they find information online?
You can go to the contacts on jsmindset.com, MINESET.com, or you can contact me directly via email at bholter@hotmail.com.